Hello traders, Gary Wagner with the Gold Forecast here. It is October the 6th, it is Wednesday, and this is the Daily Report. Another day to the upside in gold. Gold is currently trading at 1348, 51. The interesting thing is we have had a new high, record high in gold of 1352. That's correct, traders. Gold has traded above that mid $1,300 mark even briefly, but it has traded above that. This record high is really kind of pegged right now on the dollar, which has been trading much lower. When you take a look at the actual price change in gold, out of $7.90 in terms of a rise, $7.30 of it is due to the weakening U.S. dollar, whereas only 60 cents is due to predominant buying in gold. This major move right now that we're witnessing in gold is really witnessing the dollar sinking to tremendous lows. We will talk about the effect of the dollar and where we're looking for gold to go to, all on today's Daily Report. Traders, we're looking at the December contract of COMEX Gold. That is currently trading at 1349.10. And if we go back to our Forex, or what I call our spot gold chart, you can see that that's at 1348.50. So it is slowly moving up to that outer contract month. Now, Friday, we do have a jobs report, and that could or could not have a major impact on the price of gold. Right now, this market is being driven as a result of the instability in the currencies and basically, as I said, the fall in the dollar. Now, there was an IMF, the International Monetary Fund, there was a warning that currencies right now, the instability in currencies and this quantitative easing by the U.S. is really wreaking havoc upon the currency relationships themselves. And that really seems to be absolutely the driving factor. Now, it's kind of a double-edged sword, because if the Fed came out and said, we're going to do quantitative easing, but we're not going to buy our bonds back so quickly, in other words, if they slowed the handle down on the quantitative easing, that would slow down the economy. Once you slow down the economy, of course, you get safe haven buying coming into the market. If you have quantitative easing going on, then the dollar is falling, so you get a gain in gold due to that. And so because of that, right now my belief is that it's really a double-edged sword, and depending on how the Fed reacts to this quantitative easing is not as important right now, really, as potentially where the dollar is going to fall. Now, traders who took our signal yesterday, we are now long again this market at, or we'll call it 1340 in here. So we have a little bit of profit on there, approximately $8 on the trade. We did place our stops at 1280. That's 1290, on a protective stop. My recommendation is we're just going to leave the stop there right now. We're going to keep an extremely loose stop. Want to see what develops over the next couple of days, but my sense is that this market right now is going to head really into an area and begin to trade towards that $1,400 mark. That's based on my Elliott wave calculations of wave 3 being approximately 1.61 times that of wave 1. Lastly, I just wanted to take a look at our volume today, and as you can see that it is still substantially strong right in here. This is a up-down volume indicator, and as you can see, we've had very strong volume throughout the entire month of September and into October. Traders, maintain our long positions. We're going to have to see where gold wants to go. My feeling is it's going to remain solid here. We haven't had any kind of fundamental news, and this is not a market like we've ever seen before. So that attempting to look at the subtleties day by day is extremely difficult. But I can tell you, over time, long term, my sentiment is this market is headed higher. This has been Gary Wagner for the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.